Hello, and welcome to a new episode with your host, Vinney Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you. Hi there, Vinney Chopra here with Beau Eckstein back at you. Cash flow is king. That's our topic today. Beau, how are you?
I am doing well. Happy Friday to everybody.
Yes. I really want to, we were discussing before our show, what should we talk about? And what we have found is that so much cash flow has dried out. It's just not there. The multifamily is in trouble, offices are in trouble, lots of commercial real estate is in trouble, cash calls are happening. So today's topic is really important, and we're going to dig into that because focus on monthly cash flow is just needs to be the focus, not the net worth. Net worth or equity gains, which might come in 5 years or 10 years. Who knows? The assumptions, that people make, some come true, some don't come true. So what do you think about that?
Yeah, I mean, nobody has a crystal ball right now, right? But I would say the one thing we do know is investing in deals that have cash flow from day one are probably going to be a better option. And so I've always thought about this. And my thesis is value add deals that have cash flow day one. If you can find that, that makes a lot of sense to me because it limits your downside risk. So
100%.
If you invest in an asset and there's a huge upside, one is you buy it at a discount, right? You get it below appraised value or market value today. So you're buying and you're insulating in that. Two, does the asset cash flow day one? If yes, another check mark. 3, what is the value add component of it? And then what are the projections? What's the upside? If we're buying something for 10 and we're putting in 3 million of improvements, and we don't have to shut down the cash flow, meaning the cash flow will still come in. That's a huge plus too, meaning we have no downside. It's just all upside. We've got our debt covered. We've got cash flow coming in. And then as we transition the property, then we're going to start seeing, whatever the asset class is. Let's call it a hotel. Your ADR, your average daily rate goes up, right? It goes from X to X because now you have better keys or units or rooms. And so when you could go from $225 a night to $350 a night, So I think in a market like this, it's a good opportunity because there are distressed assets, and finding those asset classes that are distressed, where you got the cash flow and you've got the upside and you're buying at a discount. That's usually a proven formula for winning. I think what happens in tighter markets when there's not as much margin on deals in certain asset classes is investors typically want their money to work, so they'll put it into something that's more of a build out or a longer construction period, which those deals can have tremendous upside. The problem is it could be 12 or 24 months before the project's renovated or completed. So I think going forward, looking at cash flow as king as the main strategy, because what do investors want? They want cash flow today. They don't want cash flow in 2 years generally, right? So I think there's a margin for that, but the majority of investors really want the surety. And why wouldn't you want to do something that the probability of success is higher? So if you invest in these asset classes like we're describing, so that is a good thesis. I think I would keep my thesis like this, and that's probably what I would do to insulate from
100%.
downside.
100%, brother. You're so right. And case point, I'm doing that 506C offering for accredited investors. Have a good example of that. To be truthful, we are buying this Courtyard Hotel, 153 keys for 14 million 35 offers came, and we were able to win that offer by giving $500,000 non-refundable day one. It's cash flowing $1 million right now, but we'll put 4 million into it. That's about 19-20 million into it, and exit at 30 million in just 3 to 4 years. So you're right. The cash flow is king right now. Would we have bought this hotel if it was not cash flowing? Probably not. Probably not. Because the investors want money today. 8, 9, 10% they want today, and they want to see the business plan to go. The next thing, we talked about was buy assets, not liabilities. A lot of people have so much money outside, right? Dry powder, we call it. They buy cars and boats and toys are for fun, but they take the money, they drain the money. You need to be looking at things which will bring money back to you, streams of passive income or active income. Third point we discussed was know your numbers like a pro. That's a big one. So many investors I've talked to lately in the last few months, they say, I lost 100 here, I lost 200 here, and so forth. It's not just the horse they need to bet on, it's the jockey who's riding that horse. That's a big thing, which I've been teaching in my webinars, and do full due diligence and understand what the track record of the operator is and all that. You want to expand on that? Yeah.
No, I totally agree. I think, look, you got to understand if something goes wrong, if the economy, if there's wars, if there's another COVID, that the person that's the jockey has been through those times.
Yeah.
And ultimately, can get out of those times. And that because it's nobody gets up to bat and always gets on base, right? You're going to strike out once in a while. Yeah. That's just the bottom line. If somebody's never struck it out, or so they say, they've never had a bad deal.
Yeah.
And they've done a lot. Like, one is maybe they've never done a deal, but I would say that I'd rather somebody that has a proven track record.
Yes.
Yeah.
Yes.
Yeah. Yes. And also, I think a big thing.
You gave me $8.5 million loan in 15 days, brother. My shirt was on the fire. Fannie Mae trying to foreclose on my Georgia property. Remember? Oh my gosh. Remember those days? And you put me in touch with the lender from San Francisco. They took the flight that night and they gave me 8.5 million. Thanks to you, brother. I'm telling you, you saved my butt.
You always have to have plan B. There's always got to be a plan B.
Yeah.
So know your numbers. Mm-hmm. And then let's talk about leverage smart debt to amplify cash flow. Oh
my gosh, that is the key. I think a lot of people don't understand stock market. They like to play I play too. Stock market, you could lose your shirt and pant and everything, with margins or options and all that. But real estate, if we buy it correctly with the leverage, not 80% or 90% leverage, which a lot of people did, by the way. Last 3 years, they just went to bridge loans. And the bridge people, they want 12% per year. They're making their money and everything. They want to give you as much loan as you want. But when the economy gets soft, they lose everything. That's what happened, right? To a lot of people. Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children. And the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor. Go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it. But I would highly recommend for you to get these, or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
Yeah, leverage is a big component. Obviously, you get better returns if you leverage correctly, as opposed to coming in all cash. But you also have to figure out what the best ratio is, how much debt versus how much equity in any deal. So I think, the bottom line is, look, when the market's going crazy, everybody gets excited and we start putting money into things that we probably don't take enough time to really, think about. We need to stress test everything. Every investment you make, you need to stress test it and go, okay, what's the worst case variables on any type of deal? And so generally, if you have a longer fixed rate option on the loan, it's a good thing, right? Even if you're doing a 2 or 3 year rehab, you still want usually a 5-year contingency where the debt's not going to adjust for 5 years.
Correct.
So I think just going in, even as a limited partner in any deal, these are the things you need to know. You just, sure, you can go with a jockey, but even if the jockey's got a proven record, you still need to ask these questions because it's your money on the line and you're making an investment. You're an accredited investor. You need to still do your homework. That's your job, is to do your homework up front and make sure you know all these variables.
So true. Very.
And then we jumped into the build a recession-proof cash flow portfolio. What does that mean to you?
See, the thing is, recessions, I don't know what we're going to do with the Fed, right? President Trump is looking at maybe replacing, Jerome Powell's at the end of the term and everything. The inflation is coming in. Nobody can deny that. With tariffs, we have not seen the effects yet. I know the report came out yesterday with 9.1 percentage loss year over year for the Chinese industrial. In other words, the supply chain is already seeing the production is going down over there in China, which is because of tariffs and everything happening. People ordered, the buyers ordered larger inventories, and now they're cutting down inventories here in USA. Anyway, but the inflation is going to creep up. And now if it's over 2.5% or 3%, nobody's got crystal ball, but I think there'll be no rate cuts, this year, which is not good. So we need to be looking at distressed assets, which is, I'm looking at so many every day and teaching my teams and my students and everything to look for distressed assets because they're out there. They are out there to be picked up. Take over the mortgage, others they lose everything. Foreclosures and auctions, even multifamily auctions. What? I just came across 3-4 in Tennessee. Good place in Tennessee, going into foreclosure because the buyer who bought them wrongly, they just cannot survive.
Good points there. Turn cash flow into legacy wealth, right? What does that mean? I think this is all about legacy to a certain regard. Doing what you do on a daily basis is usually not just for yourself. Like when I think about legacy, I think about when I'm gone, right? Like I'm leaving something for my family, for my friends, or right. And so how do you create legacy? Well, you have to understand financial principles. Like I wasn't a great saver when I was younger. Now it's like, look, you're 47 years old. You need to diversify your money. You need to fund your IRA. You need to put the money in HSA, an health savings account. You need to put some in a little bit more risky assets, like I do my MCAs, the merchant cash advances. You need to park some in real estate. You need to understand tax strategy. Right? In the last couple of months, I was at dinner with a CPA and I had to correct him. I go, look, you can do a cost segregation. because he was going to move his practice into a building. And I go, well, isn't that an active business? Can't you? Because he said, I'm not a real estate professional. I go, you don't have to necessarily be a real estate professional deemed a. So understanding tax strategy, I actually been taking a course because I find it so fascinating on tax strategy. And so even when I went to meet with my tax preparer and I said, look, I just bought this Ford Expedition and it's over 6,000 gross pounds.
Yes.
And I said, she was not going to write this off. I got to use because I use it for my business. Section 179 and bonus
179,
depreciation.
Brother. Yes.
So I got like $60,000 that could offset. If I would have known that, I wouldn't have got that write off because it would have been forgotten and I would have had to pay tax on.
So true.
So even though you're not a CPA or I'm not a CPA or I'm not a tax attorney.
Yep.
The people that understand these principles and you start researching and have a grasp of like, okay, I'm going to invest into this asset class because this is maybe the tax advantages for this type of asset class. There's a lot of people out there that are high paid W-2 and they're like, well, I'm screwed. That's not the case. There are things you can start doing.
So true.
And so I think that's a big principle that creating legacy is all about understanding all these buckets.
Yeah.
And you're only going to understand those buckets by listening to podcasts. I listen to a lot of CPAs podcasts because I'm learning new tax strategies that I didn't understand. So that's how I think you ultimately create legacy. What about celebrate every dollar that works for you? Do you find that?
That's the thing, the thing is celebration. I think in life, we are here for limited time. If we live up to 100 or 104 or like that, the key thing, or 70 or 80, we need to take care of body, soul, mind, eat right, exercise, that's that. But you got to enjoy the dollar you make. If you're making good returns, if your wealth is increasing, what good is the wealth if you leave it behind and you're not really enjoying the fruits of labor? So I think it's so important that every time you grow your money each quarter, maybe take a trip with the family or do something, or do some special things of charities, and do some things so that other people get motivated also to donate. That's one thing. But also make memories with your family while we are here, and with friends and everything. Socialize, do more things, and just like Die with Zero. Remember that book you shared with me?
Yeah,
I
I was just
remember I
thinking
bought Die with Zero book. Is amazing. I would love everybody watching us to get that copy, because that will change your life. I'm telling you, instead of going for money, 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 and really be stressed out, you just look at where you are. You want to grow, but then what will you leave behind? What really counts is how you interacted as a person, as a human being, and what your family feels about you. When you're in the casket over there in the front, in the church or whatever. The key thing is, what will people say about you? It's not the bank balance or anything. It's the memories that
I agree 100%. I would say, I would add in, it is your duty as a human being to create legacy. And it's not it's when you live in a world of abundance, and it's not about your net worth. I think that was a topic it's your cash flow, it's your lifestyle, it's being able to go on vacation for a month and your business still runs. If you can build, that's real success. It's really not, hey, I'm worth $15 million. No, it's every day I wake up, I have semi-passive money coming into my mailbox, right? Or into my bank account. And when you can start understanding that's how your dollars work for you, they're your employees. You send them out and they work for you. And then you start getting to a certain level where you can then make your money work for you, and you have a jockey that is an operator of some sort of asset class and can run and manage that business, and you're getting exponential growth and all these potential tax write-offs. That's the best use of your time in general, is that you have enough money that you can deploy it, and that's what you do that's your job, deploying capital and getting it back with appreciation, essentially. So if you can do that, and that's if you can build your life around that. So if your number is, hey, I need $20,000 a month passive income, where I barely have to do anything because I've built the systems. You have to start somewhere. You have to create the dollars, and then over time, through compounding, now you have enough. You have enough dollars, enough employees, and then you want to be smart where you put that money, so those dollars actually return the highest value for you with the least amount of time spent with those dollars. True. When you can figure that out, that's ultimate leverage.
Exactly. No, I agree with you 1,000%. 1,000%.
Any closing thoughts on this conversation, Vinney?
Oh, no. I would say, what's happening over here is that maybe the trouble, I hope my recording is well, because I didn't shut down my last meeting. That might be the trouble.
No, it looks fine. It's going to render fine.
Okay. Because my Zoom meeting was on the other side that I wrapped up. But no, thank you so much. Again, thanks for watching, guys. If you like and comment, please do. This is Vinney and Beau Show. We come to you every Friday. 9 a.m. I know we took some time, off, but we are back. And please give us comments what you would like us to talk about. I think reducing taxes legally should be on everybody's mind, because that's what you take home. And at 10%, 12%, 15% per year should be the motto. Even 20, 30%, right, in deals are out there right now with good operators. So go and do your homework. And I'm so excited. I want to learn like you and take that course about tax, ramifications and how to structure taxes. And I will get that from you. And if you like to DM Brother Beau, he's right there on social medias. I'm also Vinney Chopra all over in the social media. Just reach us and we can be of help to you.
See you guys soon. Thanks for joining.
See you. Bye-bye. Dear friends, this is Vinney Smile Chopra. I am so glad you're listening to the episode. Thanks so much. Really appreciate that. Please share it with others who can really benefit also. Can I ask you a favor? Just a small favor. Less than a minute, if you could give 5-star reviews on iTunes or Stitcher, that'll go a long way. We are one of the top podcasts in real estate now in the nation, but it will really help a lot if you gave 5-star reviews, and we'll bring a lot more great content for you. Thank you so much. Appreciate that, and see you in the next episode. God bless you. Bye-bye. Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinnychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless you. Beau and I are together to really bring the best to get your business to the next level.
Do me a favor, subscribe and share. I really appreciate it, and I look forward to connecting with you in the future.